Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar traded in a narrow range through Thanksgiving as volume thinned out and broad sentiment stayed soft. Dollar slipped last week toward the 2-week low near 99.38, with the market now pricing an 87% chance of a 25 basis point Fed cut in December, plus 3 more cuts through next year. Geopolitical headlines remain a risk, but any meaningful breakthrough toward a peace deal would likely push the dollar lower and lift high beta European FX. WTI crude traded around $59.5 last week, snapping a 4-week losing streak with a modest rebound. The market remains weighed by rising global supply. OPEC Plus is gradually restoring capacity, while non-member producers continue to lift output. Peace discussions around Ukraine have also stirred speculation that sanctions on Russian oil could eventually ease, unlocking restricted supply. Attention now turns to Sunday's virtual OPEC Plus meeting, where the group is widely expected to maintain its plan to delay production increases until early 2026, while shifting focus to long-term capacity reviews. Gold climbed to roughly 4,220.8 last week, marking a 4th straight monthly gain as confidence grows around a December Fed rate cut. Dovish signals from policymakers and softer than expected economic data have reinforced expectations, with markets now pricing an 80% plus chance of a December cut and up to 3 more by late 2026. Kevin Hassett, seen as Powell's likely successor, also aligns with Trump's pro-cut stance. In the near term, price action may remain neutral as policy timing is still uncertain. Yen held near 156 last week and looks set to finish broadly flat, supported by stronger than expected Japanese data. Late week trading leaned slightly yen negative as the dollar recovered, but major downsides seemed limited for now. Investors remain concerned about Japan's fiscal health after large stimulus spending, which has driven bond yields sharply higher. October industrial production and retail sales beat forecasts, unemployment stayed steady, and Tokyo core inflation surprised higher, keeping a BOJ rate hike on the table in the coming months. Euro traded tightly around 1.16 for most of last week, but is on course for a 0.7% weekly gain as rising Fed cut expectations pressured the dollar. German data was mixed, retail sales missed, but import prices beat but had little market impact as traders stayed focused on US monetary policy. If Fed pricing continues to tilt dovish, Euro could retain upward momentum into December.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.